Hello and welcome to the GTR Asia 2020 Virtual Trade Leaders Roundtable. My name's Eleanor Wragg and I'm a senior reporter at GTR. Every year, GTR gathers some of the most influential names in Asian trade finance to discuss the challenges and opportunities the market faces, and this year is no exception. This year, as part of our virtual experience, there are secret codes dotted throughout the sessions. Delegates can collect them to be in with a chance to win a very generous prize, and I'll be letting you know the secret code from this session at the end of this conversation. Before that, I'll hand over to our participants to introduce themselves.
Hi everyone, I'm Atul Jain. I'm looking after the trade finance and lending business for Deutsche Bank in the region. Nice to meet everyone.
Thank you. And Azim?
Hi, thanks Eleanor. My name is Azim. Walli, I take care of transaction banking products, cash payments, liquidity, trade, and supply chain within the region for MUFG.
Thank you. And Claire?
Hi, Claire Thompson here. I lead global trade in our partnerships group at Mastercard. To meet
you here, Claire. And over to you, Sriram.
Hi, I'm Sriram Muthukrishnan. I'm responsible for trade products in DBS. I take care of also the trade products indication and also digital initiatives on trade. Thanks.
Thank you. And Lisa?
Hi, thank you. Lisa McCauley. I'm the CEO of the Global Trade Professionals Alliance. We're a global organisation set up to break down standards and harmonise rules and regulations to facilitate trade.
Good to see you. And Peter?
Hi, I'm Peter Jameson. I run trade and supply chain finance for Asia Pacific at Bank of America based in Hong Kong.
Great to see you here. And Kanika?
Hi, everybody. My name is Kanika. I look after the trade businesses for Citi for Asia, and I'm based out of Hong Kong. Very nice to meet everyone.
Thank you. Welcome, everyone, and thank you for joining us. So, been a bit of a busy few months. So COVID-19, trade tensions and macroeconomic shifts are all affecting the trade landscape with pretty gloomy outlooks for GDP and trade flows as a result. I wanted to get a feel from you all of the impact that you're seeing on trade flows this year in Asia and how this has changed since last year. Azim, would you like to kick us off?
Sure, Eleanor, thanks. We've seen, slowdowns in certain industries and uptake in other industries. So, for instance, with commodities, we've seen a slowdown. Petrochemicals, obviously, but in IT, in electronics, cloud computing, we've seen a remarkable uptake over the last 12 months. As far as the flows are concerned, we have found that companies are increasingly pivoting some of their business operation activities into Southeast Asia. This also applies to local companies in China, we have noticed. Many of which have become sophisticated and sizable, but they are now realizing that, keeping, the bulk of their manufacturing in one country for geopolitical reasons is probably not the wisest choice. So as a result, we've seen the shifts in supply chain. The other, trend that we've noticed, especially since COVID, is around pivoting, but related to capacity, where capacity has dried up in certain markets, and where in order to be competitive and for the companies to keep the lights on, a pivot is required. Again, within the region, generally, but not always, in order to ensure that those supply chains are moving and are kept flowing.
I think that very similar experience. I think trade flow growth overall will remain highly unfavorable short term. Right? Estimates range anywhere from 10 to 20% down year on year. And despite some green shoots that Azim had mentioned, obviously for all of the reasons you had mentioned and many more, including the sharp commodity price declines, record insolvencies, high profile fraud cases, it's all kind of coalesced alongside this pandemic into a recipe for a perfect storm. Nonetheless, I would say I'm fairly proud of how our business has performed. In our case, it's really been a function of disciplined client selection and strong growth from our advisory-based trade offering. And I'm sure this is the experience that's been shared more broadly, but I can only speak for our own institution. I think it's really helped sharpen our understanding of where we really add differentiated value for our clients and how we can support them, which is ultimately our main priority and a great blessing out of a very kind of difficult and challenging time.
Excellent, thank you. And Sriram, what about you from DBS's point of view?
Thanks, Eleanor. I think the situation is pretty much similar. So definitely commodities has been called out, but equally we had, for example, construction activity halted as a result of circuit breaker that was applied. That completely halted for a short period of time. And we're now starting to think about reopening. So similarly, the F&B sector has been significantly impacted. Transport has been significantly impacted. So therefore, the impact on the economy is very clear. We've had data coming out from Singapore, from US, from China, which pointed to Q2 especially having historic dips as far as GDP growth is concerned. So clearly the impact is immense. In terms of our customers and our trade flows, what we've also seen is that definitely these are the sectors that are called out have had to really tighten their belts and figure out. Some of them are worrying about how to make it to the next quarter or the next year. It's as dire as that. And in that context, I would especially call out the SME sector, which is critical to a place like Singapore. So nearly 70% of Singapore's workforce is employed by the SME sector. And they're definitely going through that kind of a thinking process, how to survive. I think the governments in Asia have helped, have chipped in to provide some various kinds of support and relief measures. Banks are supporting them. So I think that is the doom and gloom part of the scenario. But fortunately, there are also some positives which are coming out. Definitely with the reopening, I know China has shown in Q2 to grow its business, manufacturing activities up. There was a lot of pent-up demand, which they started filling, which means that the demand was not completely destroyed, as generally the figures point out. We feel the demand has been destroyed for good. So it does point to the fact that there is pent-up demand which comes back on stream. We've seen significant improvement in the prospects for definitely biomedical engineering and manufacturing. We've seen increase in semiconductors, for example, shipments of semiconductors. We are all doing this over a WebEx, so definitely the demand for laptops and other mobile communication equipment has gone up. So there are these pockets of activity where there's also been at least some silver lining in this whole dark cloud. And I think the single biggest silver lining, if I may call it that, is actually the greater acceptance of digitalization. The various circuit breakers, shutting down of economies, has actually pointed all corporates and banks and the entire ecosystem to the need, imperative need, if I may say, to become digital. Things that we would say we can just run a courier boy across or send a fax across cannot be taken for granted because staff are working from home. Ports have been shut down and reopening, and also the intermediate players. So I think digitalization has been one of the biggest gainers. And I'll talk a bit more about that at some time. But really, that has been one of the greatest gainers of this whole pandemic.
Absolutely. And we'll certainly talk more about digitization later on in the conversation. Kanika, from your point of view, from Citi's point of view, what have you been seeing?
So, firstly, if we look at the macroeconomic situation, Eleanor, I think WTO predicted an 18.5% or so reduction in trade flows in Q2. And I think we've seen volumes reflect that type of a reduction in a pure transactional volume activity. Multiple waves of viruses, the China, etc., in Q1, moving to a larger Asia westward, Q2 and Q3. And the fact that the world is interlinked means China's recovery also gets tempered by how quickly the West recovers or how quickly their trading partners recover. Similar to what Sriram alluded, we are seeing green shoots of, And I think a very interesting client behavior that we've seen out of the crisis around March, April, and that was the key impact time for us in Asia. You saw clients rushing in to shore up liquidity. It was what toilet rolls were to individuals, lending was to clients at that point in time. And I think most of us sort of inflated, or most of us took in and supported our clients to a large extent in their borrowing needs. But when things settled down and became calmer, what clients realized was that many of them for whom sustainable working capital solutions on the AR side, on the supply chain side, were nice to have become must-haves. And we've had very elevated dialogues with our clients on having solutions that are long-term, resilient, balance sheet friendly, and that also provide a resilient form of financing and support to their entire ecosystem. And I don't just mean suppliers, I mean ecosystem, their buyers, their suppliers, their vendors, their partners, etc. So they can continue to function irregardless of very unprecedented situations as are there today. And of course, the digital dialogue has fast forwarded by many years in a matter of 4 months, actually, as Sriram as well alluded to, and I think Atul made reference as well. And advisory is back in fashion because people want to understand what is the right thing to do, what are the alternate solutions they should be looking at. So I think as a business, trade has managed to decommoditize itself in this period, if we were to look at the positive.
Thanks very much. I think that's a key phrase, the sort of decommoditization of trade. Over to you, Peter, for your take on this.
Yeah, I think I agree with a lot of things that have been said already, and we've been seeing a similar trend. I think you've got to look at the short term and the long term, and I think whichever way you measure what's happening in trade at the minute, it shifts from 1 month to the next, just because there are so many things at play. In the longer term, I think we're seeing similar things. We're seeing a continuation of the thought process around shifting supply chains. We're seeing continued focus on adopting greater supply chain finance capabilities. And as Kanika said, digitization, and all of those things aren't new, but I think what we have seen this year is an intensification and an acceleration of all of them. On the shorter term trends, one interesting thing that we've seen given our US client base is actually not only have we not seen a fall off in imports to the US, but we've seen an increase. And there's an interesting report that suggested because people are working from home and staying at home, actually the spending that would otherwise have been going on services or experiences such as restaurants and entertainment is actually going on products. And that's why we've actually seen in some cases an increase in demand for products transiting the Pacific from west to east.
Absolutely. Okay, so we've heard from the banks. Now, Lisa, obviously a lot of the work that you do is really kind of around the international competitiveness of SMEs, which is, as Sriram sort of alluded to, is really important in Asia. From your point of view, what impact have you seen on sort of SME trade this year, and how has this changed since last year?
Well, I think the important thing in terms of looking at SME behavior at the moment right now is even before COVID, we were starting to see a lot of shifts in what was happening with regional supply chains. I think people have forgotten that, and what we were seeing was the impact of the trade situation with the trade wars. Then you add on top of that what was happening with automation, Industry 4.0. A lot of this was already starting a trend towards supply chains, really looking at where they were going to start to probably more regionalize and center around regions. And that was happening before. And then once the pandemic hit, it's actually fast-tracked a lot of this. The issue with that is that SMEs are the ones that are often behind the trends in this, because they are the ones that are reliant on their suppliers. Now, what we have seen as an impact out of the impact of the COVID, and I'm going to be very honest, there are a lot of small to medium businesses that are losing contracts. Force majeure is being used as a reason to cancel contracts. And who gets affected by that? That's the Bangladeshi manufacturing garment makers that have basically had orders cancelled from large retailers, for example. So SMEs are often the ones that will struggle. And the thing, though, that I think, if we are to always take a positive out of something that I think is, it's a horrible situation we're going through, the positive is that I think we've got to wake up and reimagine what trade looks like out of this. Trade has got to be more inclusive. We have to have better rules and regulations that can foster inclusivity from the developing world, inclusivity of women, minority business owners, indigenous business owners. A lot of things are being exposed by COVID. It's not just trade. It's not just that. There is a lot of economic injustice, and that comes together, and you can't separate the two right now, and I think they need to be put together. And it's the SMEs that are the minority business owners, they're the women business owners. And so what do we see here is the chance to reset and relook at policy that can actually foster maybe a better way to help SMEs in the future access these value chain opportunities that we all want them to see.
Excellent, thank you. That leads me on to Claire, who obviously with Mastercard, there's certainly a lot of initiatives that you're doing around inclusivity and sustainability and so on, which we'll talk at greater length about later on in the conversation. But I'd like to get your perspective as well on, what's your take on the current situation?
Sure. I mean, just building on what Lisa's saying, clearly SMEs are no doubt suffering even more than before. We know that the 1.5 trillion financing gap that was out there. I think demand for financing from the SMEs has gone up 8-fold if you would take it to this time last year. Yet the cost of the financing and the need for collateral has gone up 30%. So structurally, we're still not attacking the underlying issues in providing inclusive, affordable financing to this segment. The positive things that we are seeing is that large companies who obviously have SMEs as part of their critical supply chain are really leaning out both to us and to the banks to say, help me to kind of work out how I can help my supply chain, not just my big suppliers, but really going down to the middle market and the SMEs. So it's great to see that the large companies themselves are really wanting to maintain and provide sustainable trading and financing to their supply chain. The demand for data around the supply chains and creating a sustainable supply chain is insatiable, right? So yes, liquidity, but also tell me about actually the health of my suppliers, the health of my customers. So that is a kind of insatiable demand right now. So the demand for data, clearly the demand for data on what's actually going on in the economy and green shoots where we're seeing recovery. So yeah, I think obviously clearly we can see the logical outcomes, but the question is, is how do we respond collectively? And to Lisa's point, do something differently around really supporting what is SMEs at 9 out of 10 jobs in the global economy. 50% of the GDP. So it's critical that we, this really forces us all to focus clearly on that segment together.
Thanks, Claire. And you mentioned the trade finance gap, and obviously every year it's sort of $1.5 trillion. The figure doesn't seem to change. It's the same again this year. It's stubbornly stuck. And what is it going to take to really move the needle on this? I mean, Claire, you've mentioned sort of, perhaps looking at digitization, perhaps, focusing in different ways on the market segments. But I sort of throw this over to the banks. What is it potentially that you see as opportunities to make some progress on this trade finance gap once and for all, particularly given so much of it is in emerging Asia?
I think I can't agree more with the fact that the gap hasn't reduced. In fact, if you look at the fact that it's still 1.5 trillion against the backdrop of a global shrinkage in the economy, actually it means that the gap has gone up. Because normally if trading volumes were lower, you would expect the requirement to be lower, but that has stayed flat, meaning that actually the gap has grown. But that apart, I want to pick up on a few things that Claire said. I think it is time for banks as well as corporates to think differently, the large corporates to think differently about things like the sustainability and the resilience of their own supply chains. In the past, it has really been sometimes opportunistic, sometimes driven by their own working capital management needs, and sometimes also driven by whether I have capacity for it or not. So it's always like meeting certain goals, and if I have the spare capacity, yeah, I'll look at it. That is not, I don't want to paint all the large corporates with the same brush, but quite a few of them, when we try and when banks try and position a supply chain finance conversation, you often reach to this level of discussion. I think we got to turn this conversation on its head. So it is not about if I have the time or the capacity, it is about an imperative. If you're really serious about helping your supply chain be resilient and to survive this crisis, I think you got to take proactive positive action. The second thing is that the banks also haven't really moved significantly forward, unfortunately. When we talk about corporates supporting the supply chains, the first thing we remember is a buyer-led supply chain finance program where the large corporate signs off, say, don't worry, banks, I'll pay you on day 90 or 120. And I think we got to move beyond that, because the moment you start putting in these kinds of binds and want to have a really really safe program, you're not really stepping out of the boundaries, not pushing the boundaries. Data in the current form that we see it was not available, or it was not looked at in the same context, say 5-7 years back. But now we have huge capacity in terms of having the data and also being able to analyze and understand that better. What that really means is that we can use a lot of data-based lending techniques to understand what is the capability of the supplier or the small SME supplier to perform. We don't really need to wait for a large corporate to come and bless us and give you an invoice. Because the fact is, after a supplier has performed the good, his part under a contract, and an invoice is raised, and a large corporate comes out and says, yeah, I bless this invoice, it is actually the last 25% of his working capital cycle. We have done nothing to fix the first 75% of it. So therefore, banks need to be willing to look at data in a different form and need to step in much earlier in the game and actually be willing to take on a different mindset. I think that is missing. We are moving towards it, and frankly, I must say that many of the growth of fintechs has actually pushed the banks to start thinking a bit more like that. At DBS, of course, we think like a fintech. So I guess this is a subject which is really close to my heart. But really, we need to think about supply chains and ecosystems in a very different light. It cannot be just waiting for the large corporate to take the lead. So that is my first point. The second point that I want to make.
Sorry, please go ahead. Sorry.
Okay. The second point that I wanted to make was about this whole thing about looking for collateral and looking at pricing. Again, a point that Claire raised just now, right? And what Lisa said, every time there is an economic contraction, it is actually the small SME at the end of the spectrum. Now, what happens when there's economic contraction or an impact is that the large corporates will first look to themselves, which is fair, right? They got to first survive or manage themselves. But a lot of precious time has been lost. And thereafter, if you want to set up these programs in a formal way, it's going to be another 6 months. It is like, having a patient who's got a stroke and you wait 6 weeks to rush him to ICU. I think it's way past due. So therefore, we got to take preemptive action. That is what I'm trying to say. The last bit is that data itself has value. So we got to stop asking our SME clients to add more collateral because they don't have it. Whatever they had, they probably put up to start doing business and to whatever growth that they could. And if they're in a really situation like this pandemic situation, they're actually using their resources to survive. So if you're at that point of time, you ask for more collateral, you're not really helping. So we got to use data as a new collateral. So we got to really change the way we look at these things. That was my suggestion.
Thanks very much, Sriram. I think that's a really interesting point about, SMEs simply don't have collateral. And I think we've found this, for many years, we know that the difficulties in getting into that long tail of the supply chain has simply been because of the fact that the SMEs don't necessarily have the same profiles that large corporate suppliers do, large corporate manufacturers do. Throwing this over to the rest of the banks, how are you changing the way that you perhaps look at SME risk, for example, or how are you looking at ways of getting that financing into the long tail of supply chains where it's really needed?
I think just to add to the point Sriram made, data is increasingly the new oil and the telecom networks that we operate on are the new rails we're working on, to be honest. And I think the approach from our perspective at Citi on data is, I mean, taking again an example, suppose a buyer and a small supplier have had a long-standing relationship for 10 years. And if during that period they've had every purchase order that gets sort of pulled through for 90% value, if we have that data available, if we have that history available, and if we have a long-standing relationship with our anchor client, why could we not use that information to go deeper into the procurement cycle and finance not just the last leg of the cycle? So reliability on data, looking at a portfolio approach, and also to have your anchor large corporates to be more committed to this process and have skin in the game. Because they shouldn't just come in as a nice to have a solution requires, as opposed to wanting to have sustainability in the game. And I think another critical point is, as an industry, there has to be a partnership approach within the banks as a whole, whether it is data sharing on larger networks that many of us are now investing into, which will give us more ability to be able to do such creative approaches and finance in a manner that is differentiated from earlier. And I think governments and multilaterals also have a very large role to play in this environment. We've been having numerous dialogues with governments who are keen to try to see how they could get sort of into this process and help corporates as well as the suppliers, as well as multilaterals like the IFC or ADB in terms of having sustainable supply chain tie-ups with banks or having long-term programs. And again, to reiterate the fact that all of this has to be a planned process and not something that is reactive to a pandemic or a crisis, because putting these things together take time and strategy and effort. But some of these key building blocks have to be things we all have to start collectively thinking on early on.
Yeah.
Right.
And I would add to what you said, Kanika, partnership, data, and the government piece, because ultimately what this comes back to, in my view, is it's all about risk. And I don't necessarily mean credit risk, but risk of doing business. And each of us have our own particular target markets that we're very focused on, and particularly this year, in some ways, it's not a surprise that the trade finance gap hasn't improved, because I think this year everybody is being a lot more focused on all elements of risk. But as we think about the future, it's clear that each of us can't do that alone, because we each have our own particular area of focus. So the only way of achieving this is taking whether it's large companies or large money center banks, and partnering with the people who can manage that risk by being closest to the various end users. It's that type of partnership with some government industry level solutions that we can all help craft. And how do we manage risk, as Kanika, you said, through data, which gives us greater insights, which helps us make sure that even though we're maybe several steps further away from the parties that are ultimately being financed, we know who they are. It's almost a little bit like the food industry and what they've done with distributed ledger to make sure that there's that trace right the way through the cycle. That's where I think we need to go. Otherwise, I fear that there will always be a trade finance gap, because we all have our clients and we all very much focus on our own client segments.
Yeah, I mean, I would agree with that. And oddly enough, I mean, I'm agreeing with everybody, even though everybody said something slightly different, because I agree that there's kind of a midterm, long-term ambition that really needs to be more ambitious, more visionary, more bold, more inclusive in a structured way. But I equally agree with some of the perspective Kanika and Peter gave, which is that realistically or pragmatically, that's a very kind of far bridge to cross, right? And certainly to the point Sriram made, I wouldn't be surprised to see that number cross 2 trillion in short order, right? I mean, small businesses, as Kanika had said, have a singular focus at the moment, which is survival, right? And that means focusing on cash and liquidity above all else, producing only what they can sell, doing so in the least costly manner. And these are all tactical measures, right, that give them even less bandwidth to think about innovation, data, growth, and their clients, right? So I personally think in the midterm that the answer for those SMEs who do manage to weather this storm, and from my perspective, what then is going to create that window for significant investment to come in and then for us to start to see this gap normalize, is actually something that's not new. It's something we've seen in more developed markets over the past few decades, which is consolidation, right? Be it from national champions, global MNCs, or private equity funds, all of whom are flush with liquidity and have ample ways to raise cost-efficient capital. So there's, again, a part of me that hopes that we do something a little more bold and ambitious, but there's also a part of me that looks at what's happened over the past few decades and tries to draw a lesson from that to say there may be a reality in which it is very much survive or just consolidate.
I mean, just building on the data. I mean, data clearly, and kind of the value of data in terms of making decisions around credit, assessing the performance and financial viability of companies. But the question is, how do you do it differently to what you've done before, right? So if I think of one way, and somebody mentioned networks, clearly there is a wealth of data that already exists. There are whole platforms. So we work with many of these networks where today you have invoice data, you have purchase order data. So we should be digitally connecting the banks through also ourselves and Mastercard to these networks, not trying to singly onboard every time we're running a new program. That's one. Secondly, then it's the use of data tools. So what do I mean by that? Think about what's happened here in Europe, or it started in Europe with open banking. So creating access to data, right, through whether it's banks, whether it's through networks, and permissioning the use of that data, because all that trading history of small businesses sitting there. You just got to work smart on how you get the data. So open banking and really everybody stepping up to the plate on that is absolutely critical. And then, let's put to good use all those amazing technologies around applied technologies and AI out there. And let's start using it smart and intelligently. And it's all there. It's just about kind of collaborating within the B2B ecosystem, but really smartly using the tools that we have there around data.
Yeah, that's a great point. And it takes me on to, obviously, the next point around digitalization. So as we've seen, digitalization has become a bit of a focus recently simply because paper wasn't, able to be moved from place to place. In your view, I mean, has this experience been enough to sort of cement that need for digital finally across the ecosystem? And sort of going on from Claire's point, how can banks, fintechs, payment providers, everybody else in the ecosystem work together to modernize trade and harness digitization for the good of everyone?
So, Eleanor, I would say that, first of all, you're definitely right. I think, COVID has definitely highlighted the need to accelerate digitalization and technology offerings. And, to the point now where clients are much more actively requesting it than they have in the past. I think the two things need to happen. Number one is the interoperability between systems and solutions. So, our in-house trade platform, as an example, plus, any fintech options that we have, attached to that. But how do these all talk to each other? What I have found in many years of doing this, that, the closed ecosystems, that emerged about 20 years ago are not very successful or sustainable. So that interoperability, I think, is really important. The second factor is around global standards. And I know a lot of work is being done by ICC and others. But I think the more we, accelerate that development and the more it becomes a business as usual on a global basis, I think these two factors, will help, ensure that we're actually pushing our technology initiatives and investments and responding to customers in the way they want to use technology and to use data and to use interfacing with the banks.
And I would just add to that. I mean, I guess the answer to this is absolutely. I mean, if there was, I would never say there was a positive byproduct of what 2020 has turned out to be. But if there was one, I think this would be it, because this is not something that has digitization is not something that is stalled through lack of desire for adoption. It's, as Azim said, I can use my standard, you can use yours, but how do we actually create a common way of moving forward? And I was really interested to see a report from I think it was the World Economic Forum in June, to say that they're thinking about bringing digitization standards into international trade agreements as a way of actually driving, if you want to take advantage of this trade relationship, here are some of the digitization initiatives that need to be part of that to try and stimulate this. I think the danger in all of this is that people may focus in on a small number of things like blockchain or distributed ledger, and they will have their place. But what I've found with our clients is it's some very close to home, back to basics things that clients just never did before that they've now had to think about, whether it's electronic signature, how do you avoid having to stamp physical bits of paper if you can't get into your office. And I think it's those things that this has got to start with. If you can get the transactions into the system digitally from the outset, then at least you've got a chance if you can get all of these interconnecting standards together. But I do think there's a danger of, as Azim said, this concept of digital islands. And that won't serve any purpose, because at the end of the day, it will just take cost out of the economy as we all go off and try and develop our own things. So coming together and having a common approach to this remains really critical.
And just adding on to what you said, Peter, from our perspective, I think we're looking at it in three bits really. One is our internal digital journey. So, when a transaction hits our counters, how do we use AI or how do we use robotics or other tools to make sure the transaction is done reasonably quickly, seamlessly, and digitally? And that sort of makes things more efficient for the client and gives us scale. The second is, how do we connect with our clients digitally, whether that's on our own platforms, whether it's via APIs, or whether it's via industry or sort of platforms. And I think the third and very important piece is the larger trade ecosystem. So the shipping agents and the transport companies, governments, insurers, etc. How do we all connect the larger trade ecosystem to really be able to give effective, true digitization to the whole trade business? I mean, and just, taking your example of documents and stamping, I mean, in many cases, bills of exchange, for example, need to be in physical wetting copy, because if you were to present it in a court, you need a paper copy. How do you address for that in a digital environment? Though that's something, that needs to be addressed by governments as part of the Negotiable Instruments Act or equivalents that they have. And many governments and the larger governments in Asia, including China and India, have been working closely and in many times in partnership with many of us to create solutions that could be more digital, but in a more industry approach and a more seamless approach here to avoid the digital islands is definitely the need of the hour.
If I may just add, I thought I would share, given that there is we talked about the need for data in a structured format, right? And that is important if you're going to do something with it. And I just want to share that I think the industry as a whole, not just banks, but the entire environment is conducive right now. So just to supplement that, I just want to share with you, we recently in DBS did something called a Digital Treasurer Report in March 2020. We surveyed about 1,600 corporates, mid-market as well as larger ones. And what we found was that the number of corporates which have a clearly defined digital strategy has gone up from about 19% to 26%, which is a nice big jump within a short period. It is still March, you must remember. Similarly, corporates were starting to develop such a strategy, went up again by about 7% and is now again about 24%. So between these two, more than 50-60% of the corporates have clearly defined or are working towards a clearly defined digital strategy. And there's a material drop in the number of corporates who are saying, no, I'm just staying put as I am. So I think it is the right time for us as banks as well to support that entire move. The larger corporates will define their own way, and we will look, and they probably look to their banks to probably support that journey. But again, coming back to the SMEs, we may need to provide them greater support and potentially, we need to form consortia or whatever it is. But an industry level approach might be required to be able to support smaller SMEs to also take part in this digital journey. That is not happening enough. And if they were to become more digital, it actually talks back to the earlier point we made about how they can also become more resilient, because their data then starts also adding value to the entire ecosystem, and they can actually leverage that. I think that is an area where we probably need to spend a bit more time in the months and years to come.
Eleanor, would it be possible to respond on a couple of the things that were raised at a policy and industry level, if that's okay here, on each
Absolutely.
on and digital trade? Firstly, there is a move. There is a move within the WTO to form a plurilateral agreement on e-commerce and digital services trade. That is currently underway. Australia actually is one of the chairs of of this within the WTO, which is trying to set the rules and regulatory framework around a new future in terms of e-commerce and digital services trade. That's one area that's going on. The other side too is that at the same time you are seeing a lot of new free trade agreements or bilateral, plurilateral trade agreements that now include a specific chapter in that free trade agreement on e-commerce and digital trade and data. So that has been emerging for a while. That came out of the TPP, which I still can't use. I have to keep calling it the TPP, sorry, because CTPPP plus 11, it gets too much. But TPP has moved us a long way in that direction. RCEP negotiations are moving us a long way in terms of taking on these new rules and regulations on this area. Then when it comes to looking at the perspective from the banks, when you look at the stuff that's required from the documentation side, when the trade facilitation agreement got ratified, the whole point of that agreement was to push countries slowly, I will say this, very slowly towards adopting global standards and rules that would move us towards digitization of export and import documentation. Now, the problem actually with this agreement is that most developed countries ticked all the boxes straight away and they don't have to do anything, so they aren't doing anything. It was mainly geared towards least developing economies that needed to get up to speed with the developed economies. The big step now, and everything that I think that would help with banks, is if that TFA agreement could take a step forward on something that started to normalize and rationalize things like harmonized data standards, because we're not going to get anywhere with getting rid of paperwork, for example, or due diligence, if you don't have a harmonized set of data standards that all countries agree to. And unfortunately, the TFA doesn't push it that far. But Claire might have a different thing than me. I don't, because I think she believes that we need harmonized data standard points. But yeah, just my point on that.
Yeah, no, I wholly agree. I mean, our CEO is now also the chairman of the ICC, and clearly the push around the legal framework, but also the standards on e-commerce. And if there's one initiative or push to action that we've seen in the last 5 to 6 months with the pandemic, is getting small businesses online and to trade through e-commerce. That has been an essential lifeblood for them able to survive, to move from the physical to the digital. So the need for that to really kind of accelerate and get to the end point, which we all aspire to, is absolutely fundamental, because meantime, that is the way that companies, yes, liquidity, but getting online and trading online, taking out costs and still being able to actually run their business is absolutely critical. E-commerce is absolutely essential. As we are now, obviously, working digitally, that's how businesses need to work, and there's a significant effort around that. I think as well, you know, we just going back to an earlier point as well. So obviously, we need to enable small companies. We need to get them online. We need to push governments. The work with the ICC needs to continue to drive through in WTO. But I also think we need to take it from a kind of infrastructure level. And if you think about today, you've got all the ERP providers, the network, the software providers, right, who typically have been performing a part of the process for businesses. Then separately, companies are stepping out and doing payments process elsewhere. Work that we're really that we're working on with these ERP providers, network software companies, plugging in payments to these digital platforms. So you strip out this inefficiency of another interconnected process. I think that if you look at it from both angles, you've got to come at it from top down and bottom up. So the small businesses can help themselves, but fundamentally creating that digital connectivity in the whole ecosystem, and then obviously creating a streamless process through to the banks to actually process the payments.
Moving to the regulatory landscape in Asia, I think, we've just spoken a little bit about, things like the UNCITRAL model law, for example, which is yet to be implemented in many jurisdictions, but we have definitely seen sort of regulatory government support in Asia for the digitization of trade. And let's look a little bit more broadly at regulatory support for trade finance, sort of around the region. To what extent do you feel that there has been enough support from the regulators during this period? Tell me where the bright spots are and where you think there's still work to be done. Kanika, do you want to kick us off?
Sure, thanks. I think the bright spots are there in many of the more technologically advanced geographies where the regulators have played a very proactive role coming up with programs to support digitization, as well as to support and making sure credit is going down to the last mile in the chain. And I think some of the very large economies in Asia, what we started seeing is that there is serious government focus on creating platforms and systems, and banks like ourselves are plugging into those platforms to provide a more seamless experience to our clients. I mean, India being case in point, I think the import and export documentation in India was reasonably heavy till very recently. And a lot of this, the Reserve Bank of India and the various departments of the government have now managed to put online. And we've now plugged our system into that so that the whole interface for the clients and their exchange of data end to end can be digital. And that being one example. And in China, for example, they were early adopters of the bills of exchange or drafts being online and their e-draft system, which took a very large draft-based economy onto a digital platform. So we've got a lot of such examples, but I think where we will need more support as we go down the line is electronic signatures that Peter alluded to, or a data management sharing standards, etc. And reducing the number of checks and balances and points of control that the governments potentially need in paper today to be somehow done on a digital fashion. I think that's something governments are recognizing, but obviously it's not an easy change or a quick change to make. And there again, and at the risk of sounding repetitive, I think partnership amongst the industry to have a common recommendation would be critical to help move this along in a faster and a more organized fashion.
I think maybe one thing I would add to that is, the positive I see in this crisis, if we can call it a crisis. If I look back at 2008, regulators and banks and other players were polarized, and that's never a good harbinger of progress. And I think the difference this time around from what I've seen in 2020 is banks and regulators are very much working together in consultation, trying to think about how we solve problems and how we solve them in the future. And I think that's a real positive out of this. And it's certainly something that in previous, probably more financial crises wasn't the case. And I'm very positive about that because I think it's going to drive much better consultative industry-wide conversations that will get us somewhere in the end.
Yeah, I would second that. And I think in some ways, I think I'm quite blessed to be in Asia. While we talk about the fact that, it's quite fragmented in terms of regulations, actually multiple regulators, say in Singapore or in Hong Kong or in China or in India, I can go on. Regulators in their own ways have been trying to be very supportive at this point of time, especially. So Singapore has a hugely vibrant fintech community, and they get a lot of support from, say, an ESG, and they don't necessarily get into what fintechs are doing and how they're doing it, but definitely they provide the support. The second thing is that we also had the move towards something called the Network Trade Platform in Singapore, again, which was basically an attempt at from the regulators or the government side, creating an infrastructure for everybody to go digital. It's not a large corporate deciding to go digital. It's not a few people in a consortia, environment going digital. It enables each and everybody. It democratizes the whole digitization, of trade in Singapore. And I think it has taken off well in the sense that definitely they're going to put customs declarations completely digital on that. And whether you're an SME or whether you're a large corporate, you can access it the same way. Lots of value-added services are provided on it as well. And of course, banks can plug in and make sure the entire journey is digital. If I look at blockchain as well, Singapore again has been supporting the growth of blockchain-based responses, whether it is managing and mitigating risk or whether it's just digitizing the entire documentary trade flow, which was very, very manual in the past. If I look to China, again, multiple provinces in China have supported many of these initiatives. Hong Kong had something called the, again, similar to the NTP, they created something which is more around invoice financing, duplicate invoice financing and all that, but that basically means that banks can see data on that network. And then now there is, what I'm really pleased about is at least there is a vision to move towards connecting these networks to a network of networks called the GTCN. So I think these are all clear indications that the regulators in this region are thinking about how to make the entire trade ecosystem go digital, not one by one. I was very happy recently to see that in India as well, there is greater regulatory encouragement for the use of e-bills of lading. So I think it is getting quite democratized. And I think what we might want to do, especially banks which are operating in multiple jurisdictions, is to help connect these dots a bit better. And I think the point that has been made by Kanika and multiple speakers is how do we make sure there are common standards? So that I think that is the role and the overlay that many of us can provide into that effort.
Eleanor, I just would like to say that while I agree with all the positivity that's going on the regulation side, and there's been a lot, I think one major gap that needs to be addressed is around the use of data and the increased regulations, guidances, policies that we all face as banks around sanction screening, around trade-based money laundering, around KYC, and the ability to harness data lakes, the ability to, how do we get around, privacy issues, with global organizations, for instance, how do we share that information so that we can reduce turnaround time and respond to customers much more quickly. And I think that as our costs go up, and I think we discussed at last year's GTR roundtable, due to emerging and changing policies from a sanctions, AML, KYC perspective, that our inability as an industry to digitize a lot of this information and get around some of or respond to the data privacy issues, I think is only going to increase our cost and reduce our margins moving forward. And I think that needs to be responded to as an industry.
I agree with that, Azim. And I think, yes, clearly we've seen huge intervention in terms of government's funding, disbursements, kind of a shift to electronic trading in India with e-bills of lading. But fundamentally, you still have duplicative, costly KYC processes. So we know all banks and beyond banks are doing the same processes over and over again. So when we have the technology there, we have distributed ledger technology, we can create a corporate digital passport, which can be ported and then used across any bank, across any fintech to get access to financing, to get onboarding. But really, it's what is stopping that fundamentally right now is one, rules around kind of sharing data, but two, creating this as a utility that you don't have to consistently, repeatedly do KYC. That has a massive cost and is a fundamental cause of why the 1.5 trillion and rising financing gap exists today.
Thanks for that. I'll move on to another topic that I'm sure is very dear to everybody's hearts. So as we look ahead to the new normal post-COVID-19, there has been a growing focus on sustainability as a means of building resilience, as a means of protecting against future shocks, future black swan events. What are you seeing in the market? You know, are corporates asking for things like ESG-linked financing? You know, are there partnerships sort of happening between corporates and their financiers? Or is this a conversation that's being led by banks? What's the experience in Asia?
I think it's both, Eleanor. You know, when we have conversations, we have them with corporates and with FIs. We have a very well established, in our bank at least, a sustainable business investment strategy. And you know, for instance, we've committed to about 20 trillion Japanese yen. You know, and we've between now and 2030, we've used up 19% of that already, 20% of that. And so, you know, those discussions and deals are definitely happening. And the frequency of those, you know, tend to increase as awareness and our, you know, salespeople go out there and have those discussions. So I feel that, you know, the time has definitely come and definitely robust, and a lot of banks like ourselves are really, you know, investing a significant amount of dollars behind the sustainability strategies that we have in our respective banks.
Maybe I can just add to that, Eleanor, and answer your question. I mean, as Azim said, we kind of started to also discuss that last year, but I think this is undoubtedly evolved, you know, from my perspective, from being a buzzword to something that's here and here to stay. And I think this pandemic has probably helped all of us appreciate our connectedness to one another in the environment. Right? I think that, to Azim's point, banks, to a large extent, have already been doing a tremendous amount here. You know, be it financing wind or solar projects, or supporting mine or land rehabilitation, or positively incenting, you know, some ESG-friendly suppliers. You know, I think in the past we simply didn't have a unified banner to hang a lot of this activity under. And so part of this is about accelerating much of what we've already been doing, both by making it more visible, by giving it a name, and by finding investors in that context who then want to help us scale these activities further up. I think many of the panelists have alluded to the fact that in this environment, you know, the trade business has become much more advisory-led. And I think our clients are those who know they want to be more robust in meeting kind of their ESG standards, be it around supply chain programs or CapEx and infrastructure, but to a large extent don't really know how to do so. And this is where I think many of us can come in and help. And ultimately, I don't think it matters to your question whether it's kind of led by the bank or led by the client. I think what I can confidently say, at least, is that the positive intent to do the right thing exists on both sides.
You know, up until a certain point several years ago, I think it's fair to say that many banks and companies would have done what they would always have done, and then because it fit certain criteria, they would put a nice ESG stamp or a green leaf on it. And I think that has shifted. I think now we're starting to see banks start to link the cost of capital through to the cost of not being sustainable. I think that's really where the rubber hits the road, and you start to see traction. I would say there's rarely a request for proposal from a corporate that crosses our desks that doesn't have some linkage to how we can help them execute on their ESG strategy. And I think most interesting for me this year, I've started to receive a lot more questions from customers, not just talking about sustainable financing, but increasingly interest in what we as banks are doing to make sure that the source of funding for that financing, whether it be deposits or maybe a bond, is also sustainable and derived from sustainable sources. So I certainly think there's been a thought process that has evolved, and I suspect has probably been accelerated as a result of COVID. I think the next few years will be critical because I do feel that post-pandemic, social issues will continue to emerge and will have to be resolved. And I think we've got a very important role to play. As Atul said, it's not necessarily driven by banks or driven by corporates, but as an industry, I think we've got to step up and actually, as I said, link that cost of capital to the cost of not being sustainable.
Yeah, I was just about to add that while I agree that there is a greater understanding and appreciation of sustainability-linked initiatives. I think in Asia, I would really look forward to an acceleration of that effort. There's a lot of talk, there's a lot of interest, and there is increased activity compared to before for sure. I mean, there's the wind and solar projects that Atul talked about. Clearly, they are real and here. But I think that we can do a lot more in areas such as inclusion, financial inclusion. We can do a lot more in areas such as track and trace. For example, see, Asia is a supplier base for the world. And I think track and trace capabilities have never been stronger because of the advent of technology and blockchain capabilities. So we've seen a few of those capabilities deployed across large supply chains in the agri-commodity space, whether it's cotton or whether it's palm oil or whether it is cocoa. But I think that there's an opportunity to really step up the game here for Asia. I think there is still a huge chunk of opportunity to do something right for the world that we're still missing. So my submission is we can do a lot more.
And I would just add to Sriram's point on financial inclusion, we just have to set ourselves some hard targets, right? So we have to measure ourselves on achieving this. Throughout the pandemic, we've just taken the opportunity to refresh our goals around inclusion. So I think 5 years ago, we'd set ourselves a target to include 500 million more individuals into the digital economy. We've now upped our game and increased that to 1 billion. And in addition to that, 50 million micro and small businesses and 25 million women-owned businesses. But that's, those are hard targets, and they're going in everybody's scorecard. And that's how we measure success of individuals. And I think that's fundamental. Let's kind of put some skin in the game and let us set ourselves and stakes high.
I completely agree with having defined targets and skin in the game, Claire, because so far a lot of conversations on this space, a lot of conceptual thoughts, but the reality is that it's really the early days of being able to fructify and put together real impact here. So a lot more to be done, but the pandemic has definitely brought in more focus and more sort of real thought from people, which hitherto was I think Peter alluded to it being more of a conceptual lip service, putting a leaf over things. But I think that the mindset definitely has changed, and that's really the first step.
Maybe just one thing to add on the ESG thing. I think there was a shift before the pandemic around this. The ICC has been leading a movement on forming a committee that's looking at ESG financing, and it's doing a great job. And the ADB Roberto is chairing that. The other thing I think we all need to step back in mind is, I'm coming from a country that spent its whole summer in a massive bushfire crisis, and we're seeing California on fire right now. People are now living through the impact of environmental damage. And there are people that are waking up. There is a younger generation, a really active younger generation that actually makes active decisions about what food they buy, what clothes brand they buy, everything they make a decision about. They're pretty woke to the fact that they want to make decisions on modern slavery, environmental impact, sourcing, and they're going to affect where the big businesses make their decisions, because this is their consumer base. And this consumer base isn't going away because they're very well informed and they're pretty active. And they are the next generation, and they make decisions about this. And I think that's something we all have to think about in terms of anything we do. Businesses are going to be driven by consumer decisions. Consumer decisions have totally changed and are changing more and more with demographics.
Absolutely brilliant points from everybody. Thank you. Let's wrap up. So I'd like to ask you all for your closing statements. So we'll go around, and really I'd like to hear from you what for you are the main focuses over the next 6 to 12 months, and what are you most optimistic or pessimistic about? To kick us off, shall we go for Azim first?
Sure. Optimistic. Many have said that this too will pass. So I think patience is really important. And I think once this very strange time passes, I think we'll see a lot of changes in the way we do business. A lot of that was discussed today on this call. But I am very encouraged by a number of things. Number one, the regulator responses that we talked about earlier today. The cohesion within the industry, the banking industry, the nearbank finance industry, around technology, around standards, all the good work that's being done in that regard. And I think, in a lot of ways, COVID has really, accelerated a lot of these matters that we've been discussing for quite a many years, I think. And so from that perspective, I think that once this passes, I'd like to think that we come out stronger as an industry than when we went into COVID. Thanks.
Excellent. Peter.
Yeah, I think from a pessimistic point of view, recovery will occur. I think it'll be slow. I think the credit cycle and fiscal deficits are still going to present a lot of challenges for society. But I think we have to be positive. And if I look beyond the short term, the trends that were there will be intensified. Good trends around sustainability, digitization, adoption of tools that ultimately help the economy. I heard somebody once say that war often spurs on innovation, and in some ways we're in a bit of a war against a disease this year, and I think that will continue to spur on innovation, acceleration of what we're already doing, and some new ideas that we haven't thought of yet. And I'm very optimistic that we will be together in Singapore next year for this roundtable, of course.
Let's hope so. Kanika, over to you for your closing thoughts.
Well, I think sharing some of the optimism Azim and Peter referred to, I think to me, the critical theme for the rest of the year and going into the beginning of next year is resilience, both for ourselves as organizations, as well as for clients, and as well as for us as individuals. I think thinking of life in a different, alternate pre-COVID and post-COVID world is now becoming critical for self and corporates. And the digital journey and the digitization that we've seen over the past few months and on what we expect to see is going to be critical to building this resilience. And an innovative thought process, a reevaluation of the status quos are going to be critical as we go forward. Partnerships, alliances, and collective thought and focus critically as we go forward. And I think from a pessimistic or an uncertainty perspective, I think the multiple waves we've seen of the viruses coming and go continue till there is a clear way out of this. And of course, there will be some pain around growth rates, around how things re-emerge, which will be there before a new world order settles in. But very, very optimistic that the world order will be there sooner than not.
Excellent. Claire, over to you, please.
Sure. So I think, we talked a little bit about this. We've seen the removing, further removal of silos, but fundamentally, what the pandemic has taught us is about shifting our mindset. And I think that's fundamental. And we don't want to return to old ways, right? The mindset has opened up how basically we're totally dependent on each other, how vulnerable some groups are. And we've seen collective action, which is really starting to make a tremendous difference. So one, I think, continue to collaborate as people, as human beings, and use the digital tools and new tools and ways we have to fundamentally change the landscape as well, collectively.
Absolutely. I'm liking this message of collectiveness and cooperation that's coming through. Lisa, from your point of view, what will you be focusing on over the coming months?
We are working as a coalition with Bloomberg New Economy Solutions and the International Chamber of Commerce and APEC and the WTO on an entire new initiative on some of the stuff everyone talked about today, which is actually trying to actually come up with a new standards framework to integrate SMEs into supply chains. So reimagining what the standards framework would look like, what the data would be, and how that would be implemented to make everyone's life easier to access value chains. So I will share the information, but the first step of our work, and we just had a workshop with APEC on this, and we're doing a follow-up with the WTO is we're doing a global survey right now that is capturing the insights from small to medium businesses, large corporates and industry and governments in terms of looking at how to build resilient global supply chains as a result of COVID-19. So nearly every topic we touched on today is actually being captured by our survey. And actually, to everyone's point today, it's a collaborative survey. Anyone wants to get behind supporting this survey gets access to the data. The point here is to get the data from business so everyone can make better decisions and policy-making decisions going forward. So that's our focus.
Excellent. And over to you, Sriram.
It's really difficult to bring up the rear when everything has been said. But I know that Atul still has to say. I feel that, you know, from a pessimism or a concern perspective, definitely the human cost of the pandemic stays in mind. And unfortunately, we don't have a clear line of sight of the end of the tunnel, right? How far is the end of the tunnel? So that is clearly a cause for concern. And even after we do come out of it, which we will, the human cost that has already been paid will remain. So that is a big area for people to remember. From an optimism perspective, I think the pandemic and the shutdowns and the circuit breakers have really brought to the front the whole. They basically caused a digital physical reset, if I may use that term. Basically, it's caused people to really switch over in their corporate activities into a more digital mode than they ever have in the past. I think it was very interesting before this that the individuals were happy to go on their mobile phone and order T-shirts or mobile devices. But the moment you say order 1,000 of those for your company, out comes the paper. And you start issuing a letter of credit and you start querying. You completely, it's like you're suffering from, I don't know, bipolar disorder or something like that. So I think that has changed. I think people have their identities, the corporate and the individual identities starting to merge. Gen X, Z, and Y, the new customers are here, and they are demanding that we treat them as digital customers. They don't have the patience to stand in line in a brick and mortar shop anymore. So I think that is what I'm really most pessimistic about. I think that we've really found a way to accelerate and basically make things more digital, the journey is more seamless and more democratic, therefore. That is where my optimism comes from.
Excellent. Over to you, Atul. What's keeping you up at night, or what are you most optimistic about?
Yeah, well, it's a bit of awesome content to follow. I think the start of this decade it's definitely turned out to be a far cry from the roaring 20s. I think many of us have been hoping for, and in fact, I think to Peter's point, many of us have never really been tested like this. And also, I think to the point that's been made, we're far from out of the woods, and I don't see a V-shaped recovery ahead of us. So, amidst the struggle, and again, that's been said, I think businesses and societies will emerge more innovative, and I love that word, more resilient. And nations, and I think Sriram had made that point earlier, particularly those in Asia, I think adopt a more constructive and sincere attitude towards partnership, which over the long term bodes incredibly well for sustained GDP growth and correspondingly for us in trade finance. The pandemic has definitely accelerated our critical thinking around redefining what we're helping our clients finance. I think one great example of that is asset as a service, which is the adoption by our clients of subscription-based pay-per-use models that translate their CapEx into OpEx and completely redefining their business models. And that's one example, but I think it kind of plays to the point many have made around using this as an opportunity to rethink and reimagine and kind of decommoditize trade finance. I do remain convinced that the long-term positive trend line for our region and trade growth in our region remains firmly intact. And I think I can only say as a final statement, I'm ready and excited to work with our clients to bring that growth story to life.
Thank you, everyone, for all of your comments. I think this has been a really engaging, really interesting, and really insightful roundtable, despite being virtual. So thank you. What's really stood out to me from all of your comments is that we're certainly going to need to see a concerted push from all players in the trade ecosystem in order to achieve all of these very many shared goals of sort of modernization through digitization, growth in sustainability and equality, and also the recovery of trade and economic growth in the coming months. So once again, thank you so much for participating today, and also thank you to our audience for joining us. Also, as promised, for those delegates who are collecting secret codes to win the very special prize, the secret code from this session is Roundtable. Roundtable.